down. Hand over my crown. Hand over my heart. I do this for my town. I do this for my crowd. So turn me up real loud. My time, my time. None of you people can tell me to stop.
Hello everybody, welcome to this week's episode of MGR Unplugged. My head is exploding today. Yes, I just listened to, did you listen to that? Did you listen to the last episode of Joe Rogan with Alex Jones? And then before that, it was Kanye West.
Some big hitters this week.
Yeah, actually, yeah. This is not the topic of today's podcast, by the way. We're going to discuss cryptocurrency and Bitcoin, Ethereum, and everything. But
Kanye 2020.
yeah, but Joe Rogan, who, as you guys know very well, he just signed a huge contract with Spotify. He had Kanye West just before the weekend, I think.
Mm-hmm.
Yeah, long interview. Interesting. I mean, which, by the way, Kanye West is running for president. For those of you who don't see it on the ballot, you can still vote for him if you want to. And then, so that was very interesting. I mean, I recommend that you listen to it, whether you like Kanye or not. It's kind of interesting to see his points of view on different things. And then just 2 days ago, I think he uploaded another one with Tim Dillon, who's a comedian that we really enjoy. We actually went to see him 2-3 weeks ago, I think. He was here in Phoenix. And then Alex Jones, of course, of infamous Alex Jones, Mr. Conspiracy Theories. So I just finished it this morning. It was a 3-hour plus, I think, episode. Yeah. So for those of you that say hours are very long, that was 3 hours plus. And oh my God, these guys are like, he's full of theories. And Tim Dillon is a big fan of his too. So what do you think about it? Do you listen to the whole thing?
I did finish it yesterday.
Yeah.
It's Alex Jones. I mean, if you know who Alex Jones is, you know what you're getting when you listen to it.
For a little background, he got suspended or banned from, if not all the, pretty much all of the social media platforms, right? I mean, YouTube is not allowing his channel anymore, banned the channel. Facebook, Twitter, even Apple Podcast, stopped putting the podcast for all his... Spotify too, actually, by the way, is true. For his conspiracy theories, disseminating false information, blah, blah, blah.
The reason he got banned was because of the Sandy Hook thing.
Yes, that was the straw that broke the camel's back, basically, because he was getting different warnings.
At one point, and he's taken it back, he's apologized, all that, but he was at one point saying that Sandy Hook was fake and that it was actors and that basically they were lying. And
the whole thing was staged.
Because of that, a lot of his fans were like sending death threats and stuff to the parents of the children who died because they thought they were actors, that it wasn't real. So basically, that's why he got banned off all these platforms. I mean, listen, I'll say one thing about Alex. I did not believe in the pedophile rings. I heard about them for years. Right, and he was one of the biggest proponents that there was an island for pedophile rings, that a lot of elites like Bill Clinton and a whole host of others were
Prince Andrew and some other
involved in these pedophile like rings, and they were trafficking children, and they had an island. I thought that sounded crazy, and it was true. And right. He was talking about Jeffrey Epstein for years, and it was true. So. Is he right about everything? No, definitely not. Is he right about some things? Yeah. And so it makes you definitely question things when he is right about things that sound so crazy beforehand, but then end up being true.
Right. So, I mean, I don't want to get into the podcast is obviously very long, but the thing that I was most surprised by is that, when Rogan moved to Spotify, he had a lot of critics thinking, because he's always been very, he's Joe Rogan. He's the most independent. So he's always been a free spirit as far as being able to run his show the way he wants it. No censorship, nothing. And then when he went to Spotify, he started getting some comments thinking that the shows were not the same, that Spotify has this committee that they need to approve everything and basically censor some of the comments. They transferred the whole podcast library and they left some out, including Alex Jones' previous episode and some others that were a little more controversial. So all that stuff was not clearly explained. But then he just had this podcast, which in 1 or 2 days had like 2 million or 3 million downloads by now.
Oh, much more than that.
Well, last night I think we were looking, or it was 2 nights ago, I forgot.
Oh, I mean, I think it's probably easily. I mean, there's YouTube and then there's the other downloads.
Right. Oh yeah. No, I'm just talking YouTube. I was watching YouTube on the big TV last night, and I saw but I mean, the downloads are incredible, which means that people actually do like that kind of content, even if it's long. I don't know how much they were listening or watching.
It has 7 million views on YouTube already.
Just on YouTube, 7 million. That's outrageous. And that doesn't include any of the audio podcast networks, Spotify, Apple Podcasts.
He said it's about 50-50 normally.
Okay, so
you could say there's almost certainly more than 10 million listeners to that podcast already.
So the point is that Alex Jones was banned from all the social media platforms basically for his
Which is funny because he was banned from Apple Podcasts, and now the podcast, that episode is the #1 this morning on Apple Podcasts.
Exactly. And the same thing for people that were saying that Spotify was censoring or controlling the content and the guests, and they had to be kind of pre-approved and all that stuff, which Rogan said forever, that's not true. I have total freedom to do whatever I want. And I mean, that's just how it is. So I whether you like conspiracy theories or not, I'm not a big conspiracy theories person. But some of the things, like you said, they make you kind of double check and think about it. So,
I mean,
and the thing is,
like some of them sound crazy, but then some of them end up being true, and that's when it makes you question things.
But the other thing is that they also, because of the timing of this podcast, they also discuss obviously the elections, the campaigns and all that. So without getting into political sides, I mean, obviously they have their own opinions about how the campaign is being manipulated. The media has been manipulated, the message. Obviously, COVID is the center of attention these days. And I think they say that they're going to have a podcast or some kind of get-together on election night, right, to go over the results and everything live or something like that. So I'm not sure exactly how they will work it out. But either way, it was interesting and head spinning for sure. I was working out actually this morning, listening to the last hour of it, and I was like, my head was just exploding, like I said. So anyways, enough of that. But yeah, we do have the elections amazingly coming in 3-4 days. Apparently there are 70 million people that have already voted. That I think is a record for obviously with COVID and all that. A lot of people prefer to mail in their ballots ahead of time and not being in line and all that. So that's one of the reasons. But there's been so much campaigning actually for voting ahead of time that I'm not surprised that this year they said that 70 million is usually about half of the people that normally vote. So normally I guess 150 million people vote in the US, which is quite a bit. So half of them apparently have already voted. So the campaign or the campaigning by the candidates over the next 48 hours or 72 hours will be for those who are undecided and they haven't voted yet. So we'll see how much of that is going to change. But yeah, we'll see November 3rd, if it's November 3rd, or how long you think it's going to take to find out.
I have no idea. I don't know. I just want to fast forward through the month of November.
Yeah, I know. Well, we'll see. I mean, unfortunately, we're not going to be able to fast forward, but it's gonna drag a little bit. So, all right. So let's move on. The actual topic for today is going to be, or is actually, cryptocurrency and blockchain, and then we'll get into some of the actual currencies, like clarifying a little bit of Bitcoin. And the reason why is because, we're living in a time where the Fed has been manipulating rates, obviously, since the pandemic started. I mean, basically, interest rates now are down to zero, which means that for savers is bad. Whether you go to, when you put your money in the bank to save money, and back in the days you used to get 5-6% interest rate, which is pretty significant. You have $100,000 saved, and at the end of the year you have $6,000 extra, which is $500 a month just in savings and interest rate. So that's been disappeared right now. So if you want to put the money somewhere so it's a little protected for inflation, which is another topic in itself, you want the money to be making at least 2-3% return, wherever you park it, so to speak.
More than that.
Yeah, well, I mean, let's just consider inflation as the Fed definition of inflation, between 2 or 2.5 let's say that you want to make 3% to be above inflation. So, but really, there's no way to invest your money safely, even though you just get a 3% return. But that was basically the safe return that is low risk, because you put in a money market account or savings account or something like that, or even CDs, and they give you that kind of interest rate. And you said, okay, you know what? I don't want to invest in the market. It's too risky for me, or for whatever reason. And then you just put the money in a savings account or a high yield savings, which is 2-3%, and at least you kind of live with inflation at the inflation level. But now that doesn't exist. I mean, with the interest rates at zero, basically you get nothing. You put the money, and then the bank is going to give you nothing. So with that in mind, crypto is basically, or other possible options are kind of surfacing right now. And in the last, I'll say 2 weeks specifically, to condense it a little more, we've seen a lot of people that are seeing this issue with a lot of money being printed, devaluation of the dollar and all that in the future, obviously, and then looking into other types of investments, which basically brings me to the point that Bitcoin has gone from, it was in the 11,000 and change, 11.5 or something about 2-3 weeks ago. And as of yesterday, it was actually, even today, right now, is 13.5 or something, which is the highest it's been since 2018, I think. So David actually knows quite a bit more about blockchain and Bitcoin and cryptocurrencies in general. So first of all, I wanted to clarify the technology versus the currency. So let's start with the blockchain technology and kind of clarify what that is, because everybody knows that crypto is based on blockchain, but they don't understand. A lot of people don't still understand what blockchain means for the world, because blockchain is here to stay and is here to grow and is going to dominate a lot of our lives in the future as far as how we do business. So take it away, brother, and explain as much as you can in terms that we all understand what blockchain means for us, for contracts, for the way we do live our lives now, as far as the contracts, how blockchain will affect that.
Yeah, I mean, I'm not the world's biggest expert. There's
Right.
plenty of people who know more than me, but no, I mean, blockchain. The problem with I don't even like that word anymore, because it's been stolen from the people actually making things by all of these posers and snake oil salesmen and pundits who just, it's become another buzzword, in the same way that, like, no one in the AI community really likes using the term AI anymore, because it's become so, like, people use that word constantly for things that aren't even AI and don't have actually any understanding.
Yeah,
so that's why they start using ML, and they try to stay away from AI. Blockchain, I mean, very simply, it's just a mechanism for decentralized trust. That's really what blockchain is.
So since you said that about the name, let me interrupt you for a second. Since you said that about the name, what did the name blockchain come from? Obviously, you have block and you have chain. So it was a series of blocks.
Yeah, it depends how far you want to go back, but the origins start in the 80s, 70s. Back in the early days of computing, where it's all based on cryptocurrencies. It's crypto as in cryptography,
right?
And so it all started with cryptographers back in the 70s and 80s who, as computers were being basically developed, started trying to see what they could use. What new methods of cryptography would be enabled with computers. And so that's when it all started. And so this has been building for a long time now. It took a long time to kind of figure out exactly how to turn it into a usable thing. And it all culminated with Satoshi Nakamoto in 2009 when he released Bitcoin, or whoever Satoshi is released Bitcoin. But yeah, blockchain is the reason they call it that is because, for example, Bitcoin uses it's a chain of blocks, and each block is a block of transactions, basically. And like you could call it, other people call it a distributed ledger. So it's this idea that instead of having if you're an accountant, right, and you have a ledger of all transactions that are going on this chain, instead of having it all on one computer, you have it on many computers around the world, and it's decentralized and distributed between all of them. So if someone hacks your computer or takes your computer down, you still have many copies of it around the world, and the difficulty of hacking it becomes astronomically higher because it's distributed, because you don't have one central point of failure, basically.
Right. You have a lot of redundancy, so to speak, as far as where the ledger is hosted, if that's the way.
Right.
Like in the website world, the websites used to be hosted by one server, and then when that one server was hacked, the entire website, whatever, was down. Now modern servers or modern companies use, like ourselves, we use redundancy, which means that we have multiple servers with copies of the same website. So if this server goes down mechanically for whatever reason or some kind of event, floods, fires, whatever, then there's tons of other servers that have the same copy of the website. So that's just on our level that is easy to understand, but this is the same thing as the ledger that you're talking about.
Yeah, it's just much more distributed.
Right, much more, yeah.
So then the cryptocurrencies, they're just one implementation of blockchain, basically. Blockchain can be used for a lot of things. Currency happens to be one of the biggest and maybe arguably the most important thing that it could be used for.
It's definitely the most popular, but
yeah, obviously.
Before we get into the actual currency, what applications of blockchain are the most being implemented right now? That there's already blockchain being used for a number of contracts and things.
So you mentioned contracts. So one thing that blockchain does is it lets you create what's called smart contracts. And so what is a normal contract, right? A contract is an agreement between two people, two companies, a group of people, group of companies, whatever, right? It's an agreement between people. But the problem is that there's lots of litigation in contracts, and how you interpret the words in a contract can vary from person to person, right? And this is the job of lawyers. Lawyers look at contracts and they litigate and interpret exactly the meaning of them. And that's why you hire a lawyer to write your contracts, because in theory, they can write a contract that is bulletproof, right? There's no such thing as a bulletproof contract, but that's the goal.
They cross all the T's, dot all the I's. They make it like airtight.
It's kind of similar to when people talk about the U.S. Constitution. The way it's written is very vague, and that's why you have so many what they call like constitutional scholars, where so many people interpret the Constitution in different ways, because words ultimately are amendable, and they change in meaning over time. They can be interpreted in different ways. The right to bear arms, that's very generic, right? And that, are there limits to that? Is it unlimited, right? So this is like why you have all of this. And so the same thing with any other contract. So what a smart contract does is you can write the contract instead of in the English language or whatever language. You can write it in code. You could write it in Python. You can write it in whatever code you want. And then it's done, right? Code is code. It doesn't change, basically. And so then you can write a contract in code, and it just makes the process much more seamless and much easier. And so you really are kind of replacing the need for a lot of lawyers, the paperwork industry, which is quite the large industry, could very well be replaced by blockchain and smart contracts. So I'll give you an example. So like if you have a will, wills tend to be very complicated, right? There's lots of disputes in wills. But if you just made a smart contract for the will that says, when I die, distribute my money, whatever I have in this wallet, distribute it to this wallet and this wallet and this wallet, and those are your 3 children or whatever, and don't distribute it to any other wallets, then that's it. That's the contract. And then when you die, it will automatically send it to those people. And it's done. There's no lawyer needed to interpret. You don't need to go in front of a judge and discuss who gets what. None of that. You just have a smart contract written in code, and then that money, for example, could go to your 3 children, and you say, I don't want to give it to anybody else. And that's it, and it's done. So that would be an example. Lots of examples like that.
So this is a good example. You say when you write a will or some kind of living trust or one of those things, you end up with a binder with all kinds of provisions and all that stuff and what happens. But so the smart contract takes care of that automatically, so it doesn't need to go to an attorney to interpret what was written years ago by another attorney.
No, exactly. That's the point.
Okay, so that's what the code handles, and obviously the smart contract applies. Like right now, you can buying a house, the title of the house, any kind of agreement, purchasing anything that is basically requires some kind of agreement or purchasing any contract, like you said, between two people, two companies, or a number of people, whatever, could be basically in the blockchain, and that also makes sure that it's not altered in any way, because the block is basically ensuring the fact that it's going to be intact, basically, from the moment.
The blocks are permanent,
right?
So you can't go back and change them, basically. And there's good and bad to that. But the good is that once you have something on the, say, Bitcoin blockchain or Ethereum or whatever you're using, it's permanent. You can't go back and change it. And so no matter how much someone might want to, they can't. There's nothing they can do about it. And so that's why smart contracts are just much more efficient than a lawyer or any other type of person trying to interpret what a contract might say.
Where do you see blockchain growing faster in the next few months? I mean,
few months or a few years?
Months and years, both. I mean, right now, I know that banking institutions, investment institutions, and mostly in the financial world, they're already starting to use some of the smart contracts. I'm not aware of home builders, realtors, and things like that, or title companies still using them. I guess you buy a car. Do you have a smart contract at some point, or are you going to have a typical title?
Right, you could. It's complicated because obviously you're dealing. There's the theory and then there's the practical. And the truth is that all of this stuff right now is run through the government, right? So we don't have. The founding fathers didn't have a decentralized trust mechanism. So they basically said the government's job, one of the main things their job is to protect your property rights. And so that's why we have all types of government workers whose entire job is to deal with property rights, whether it be a house, a car, anything that people own, and to go over the litigation of what happens with transfers, with transactions, all these things, right? That's one of the biggest parts of a government's job, like in the United States, is protecting property rights. A lot of that can be automated. I'm not saying that the government will never be involved, because obviously one thing is saying, I have that title of my house on a blockchain of some sort, but it doesn't stop. If someone's squatting in your house, you still need police to come in there and kick them out. So obviously, there's limits to what the digital world can do.
Right.
But it can make things much, much, much more efficient than they are now.
Like, for example, tax returns and things like that.
Yeah, well, that's probably way down the line. Not going to happen anytime soon.
I mean, the tax code is so complicated, and now, I mean, every
yeah, but it's not complicated by accident.
Well, yeah,
it's complicated on purpose.
Well, it's complicated because every government or every political party or every president adds another layer of exceptions and conditions and caveats and this and that and all that stuff, and then we have a tax code that is huge now. And even you talk to different professional accountants that are all of them very experienced, and they all, like you said, interpret taxes different ways, or the application of taxes.
If you're asking me when the U.S. tax code will be a set of rules coded, I have maybe never. I mean, honestly, because that's up to the government. So, when you the challenge with like smart contracts is the government side of things, right? Smart contracts work. They're here. They work.
You're right. But
the problem is the government side.
The whole thing we're trying to do is decentralize basically stuff,
Right.
take it away from being centralized with any government. And we're in the number one country in the world, basically, but you go to other countries and there's a lot of corruption and shit like that. So you want to have things that are decentralized, that a person, you have a contract, and I go with a person in Venezuela from all countries, and it's a smart contract. I can trust that that contract is legit if it's basically in a blockchain.
Right. In that case,
Whereas if it's something that the government
if you're living in Venezuela with the Venezuelan government,
Exactly.
you would much rather use a smart contract than
Exactly.
have to rely on the Venezuelan government to help you.
Right.
Right. So in
That's
the
my
U.S.,
point.
we're in a different predicament.
Right.
Because the U.S. government still, they're not perfect, but they still do a pretty good job of protecting property rights. Now, it might not be efficient. It might not be the best way to do it, but at least for the most part, they get the job done.
Right.
But smart contracts are just one thing. I
Mm-hmm.
mean, it's definitely a big thing, but it's just one thing that blockchain lets you do.
All right, so let's go into the currency, which is the more popular application of the blockchain, meaning cryptocurrency, basically. So, as far as cryptocurrency, everybody knows already Bitcoin is the most commonly referred to, and in fact, is becoming almost like the Kleenex of cryptocurrencies. Everybody says crypto is Bitcoin, and there's like thousands of different coins out there, or cryptocurrencies out there. Full disclosure, I own some Ethereum, which is probably the second largest one, and you own some Bitcoin. So
I own Bitcoin and Ethereum.
you own both? Okay, I only have Ethereum, and then a couple of other minor ones that are so small that I don't even remember their names. I think Neo or something else. But regardless, I went into that years ago, and it's like a side little thing, and I don't even look at it that much as far as what it's doing now. But anyways, with that said, what makes Bitcoin the leader of the pack as far as crypto? Is it that it was first, or is it that it's different, better, unique? Why, when people when people refer to tissues, they say Kleenex? Why, when people refer to crypto, they say Bitcoin?
Few reasons. Yes, it was first. It was the first major one. There were others. There was BitGold, which was by Nick Szabo. That didn't work. A lot of people think Nick Szabo is Satoshi Nakamoto, that he made it pseudonymously. There's other people. Anyways, we're not going to get into who Satoshi might be. But anyways, it wasn't the first, but it was the first one that really worked. Because Satoshi figured out some things that weren't figured out before, and it finally worked, and it was scalable, and the consensus algorithm that it used was the best up to that point, and it still probably is today. It depends who you ask, but the reason why Bitcoin is the biggest is, yes, it was first. It's the largest by market cap, and so network effects matter. And so when you have a coin like Bitcoin that has so many people already bought into it, it's still volatile, but compared to most other coins, it's actually relatively stable. It has probably the most adoption out of any other coin. Bitcoin and Ethereum are the two largest, and all the others are much smaller. And so those two have the most adoption out of anything, and the most recognition by other institutions too.
So let me back up a little bit.
And
You
it has a
say-
very fanatic fan base.
Right. Yeah. That's definitely true. I mean, some people just swear by Bitcoin, and that's the only thing they recognize. But let me back up a little bit. You say that. What was the name of the creator of Bitcoin?
Satoshi Nakamoto.
Okay, this is the name that circulates there that people think it could be a pseudonym, or it could be true or not. Or
It's a pseudonym. Nobody knows who it is. Could be one person. Could be a group of people.
Right.
There's rumors. People think. You can go online and look up.
Right. So
There's people who it probably is, but we'll never know for sure. And that's not the point. The point of it is that it doesn't matter who made it.
Right. No, that's my point. So how does a person decide, okay, well, we have all these, what we call fiat currencies, the dollars, the euros, and all these other currencies, and then I'm going to create this other decentralized currency that is in the blockchain, basically, and they write the code, and they decide, in the case of Bitcoin, like you said, it's the largest, but it still is limited. So it's limited to 21.
Oh, the amount of
Bitcoins.
Bitcoins, 21 million.
21 million Bitcoins.
Yeah.
Excuse me. So, for one, there are no such thing as physical Bitcoins. It's all digital currency. Because, I mean, no, the reason I'm saying that, because some people think that the Bitcoin is like a little gold thing or something, because you see all these pictures with a bee and all that stuff. Like, it looks like
Yeah,
it's,
people make artistic renderings, but no, there's no coin.
Right.
It's just it's
So-
just a number on a computer. It's a number in a database, basically.
Right. So based on that, I don't know if you know this, but how does a person say, I'm going to create my own currency or a currency that is going to be decentralized, it's going to be digital, I'm going to make only 21 million of them, and I'm going to hope that people...
How did Satoshi do it?
Yeah, how did it start?
Well, like I said, this isn't something new. It wasn't like Satoshi was the first person to ever think of this. They've been working on this since the 70s and 80s, since the beginning of computing. And then in the 90s, it really grew. And this is when the reason why some people think Nick Szabo is the creator is because he's been working on that since the 90s, basically. And he created BitGold, which was supposed to be like digital gold. And many people say BitGold was the precursor to Bitcoin, because it's very similar how it's built. It's just that Bitcoin figured out some things that Szabo hadn't figured out in BitGold. So it wasn't new. It wasn't a new idea. It's just that nobody had done it successfully. And Satoshi Nakamoto was the first one to do it successfully, I guess is the point.
So what does that mean successfully? That people adopted it? That people bought into it?
Yes, that the
Because, I mean,
consensus
Bitcoin,
algorithm
when
that
started,
he made
How much was the Bitcoin worth when he started? I mean, when he says
at the beginning, I mean, it was like pennies.
a penny, right? Exactly,
Yeah,
it's
yeah.
worth nothing. I mean, basically, you say, "Hey, I created this cryptocurrency. It's called Bitcoin, and here it is. We're gonna make 21 million," but he didn't. The Bitcoin is mined. It's not like the Treasury Department that is printing money. It's basically, it needs to be mined, which is another concept that is not very clear what that means, because he capped it at 21 million, but there was no 21 million Bitcoins made or created.
Right, there still
right
aren't.
away. Right, exactly. So explain a little bit, if you can,
The mining part. I mean, the mining. Mining. So there's a thing called. There's different ways that you can run a blockchain. The first original way that Bitcoin did is called proof of work, and this is what most cryptocurrencies use. There are some that claim to use other methods, but a lot of them end up kind of not being true. I'm not going to get into that, but proof of work. The other big way is proof of stake. This is what Ethereum is trying to do. So Ethereum is on proof of work. Ethereum 2.0 is going to launch at some point. They've been working on it for a few years. It'll probably launch, if I had to guess, probably next year, 2021. And then they're going to move over to proof of stake, which is a different these are verification mechanisms, basically.
Well, I mean, is there an easy way to separate or define one and the other?
Yeah.
Or which one is better?
So proof of work, this is where Bitcoin gets criticism, because I think they said something like the amount of energy used to run Bitcoin is more than like the entire country of Austria or something like that in 2019.
What does that mean? Amount of energy?
Basically, you have all these computers running around the world,
Uh-huh.
and the energy they used to run the Bitcoin blockchain was more energy than the entire country of Austria used in 2019.
Wow.
So the argument is that proof of work is inefficient, basically, and that especially if you scale it. Keep in mind, Bitcoin is not that large yet. If you scale it to say it is a true global currency that everybody in the world uses, that the amount of energy needed to run that is going to be massive.
And those computers around the world are from actual normal people that have...
Yes and no. I mean, in the beginning, yes. In the beginning, it was
I
very
remember
much...
people were mining.
Yeah. In the beginning, I used to mine Bitcoin on my computer years ago. But Nowadays, it's not efficient to do it on like a normal computer. You have what's called ASICs now, which are application specific something chips that are basically specific. I wouldn't even call them a computer as we know, but basically specific chips that are made to create or to mine Bitcoin. So they're much more efficient, basically.
Right. So basically, you have a computer that is churning constantly 24/7 all the time, connected to
It's
multiple...
verifying the transactions.
Right. It's basically part of the chain, part of the verification
And so
process.
how proof of work works is, in simple terms, you have these computers around the world that are solving math problems. And these math problems are how they verify the transactions on the chain. And then once you have a consensus of verification, then that block basically becomes permanent and it's on the chain. And once that block gets out of the chain, it's there forever. There's no removing it. And the reason they do this is because there's a thing called block rewards. And so why they call it mining Bitcoin is because it's like mining gold, right? You spend a lot of work to dig down and mine, but then the reward is you get gold at the end of it. And so you get rewarded with Bitcoin for being a miner, for dedicating resources to verifying transactions. The reward is you get Bitcoin.
How big is that reward?
What do you mean?
Well, I mean, if I'm dedicating a computer for a whole year to basically be part of the verification network or block, is there something? I mean, I'm thinking like almost like a dividend, like you hold a stock.
Yeah, I mean, back in the day, you could get 1,000 Bitcoin. Nowadays, that doesn't happen anymore.
Well, that's my point. Do you get rewarded in exchange to dollar value, or how does that work?
No, you get rewarded in Bitcoin.
No, I understand, but I mean, one Bitcoin, like you said, 20 years ago or 15 years ago, if you existed.
No, Bitcoin started 2009.
2009. Okay, well, we're 11 years. So one Bitcoin 10 years ago is definitely not the same as one Bitcoin today.
Yeah, no. The block rewards back in the day. I mean, I don't know. I know it used to be in the thousands, right? So you could make thousands of Bitcoin a year mining back in the day. But now the supply is much, much, much less. So now you don't get that at all.
Okay.
That's why people used to mine with like their own computers. Now you would lose money. Like if you just started mining Bitcoin on this computer, it's not efficient. You wouldn't make money.
Right.
It would cost you more in energy than it would in electricity, basically, to run the computer 24/7 than you would make in Bitcoin.
Right.
So that's why they have the ASICs now. They have special computers made for mining Bitcoin.
Who makes those computers?
You can buy them. You can look it up. There's companies that make them.
So
They basically they design.
It's not like you go buy a Dell or something and then
No. Back in the day, yes. Back in the day, I used to run on my gaming computer, but now you can't do that anymore. It's not efficient. So you can go.
So you have to invest, buy a specific computer that is just for that.
You can Google Bitcoin ASIC, ASIC. You'll find them. Companies sell them.
Okay.
Yeah.
And you buy the computer, and normally, I don't know how much are those computers,
It depends on the power.
but average. I mean,
It can be. I think the cheapest is probably I don't know, $1,000. The most expensive, you can buy tens of thousands if you want to.
okay. So let's say you buy one $5,000 computer. Do you amortize that expense in 1 year, or does it take several years?
I don't know now. I haven't looked at it in a while.
I'm just kind of curious to see
but
what people...
when I was doing it, I think it was like it was like a few months to make your money back. Now, I had already owned the gaming computer, so it was like a sunk cost anyways. But yeah, I remember I calculated it was like 3 months. I was mining Bitcoin and Ethereum back in the day. But yeah, it's now. So you want to get into like the negatives of Bitcoin?
Yeah, well, first I was kind of curious about the process. Like you said, like it's so decentralized that everybody can kind of help mine, or basically, like you said, digging gold, creating Bitcoin by donating or creating a platform that is part of the network verification blockchain and all that. So
the solution is.
But you said that Ethereum is going to the
proof of stake.
Proof of stake. So
the reason they're going to proof of stake is because there are problems with proof of work. One, obviously, it takes a lot of energy. Two, in theory, this is where my level of knowledge becomes limited, and there are people who are much smarter than me. If you want to get really in depth, Vitalik Buterin, who's the founder of Ethereum, did an interview on Lex Friedman's podcast, and he gets very technical and in depth on a lot of the explanations, and I highly recommend it. It's a great listen. But anyways, there's different opinions and schools of thought in the crypto community, if you want to call it that, and some people think proof of work is the best option. Some people think proof of stake is better. There's other things. There's delegated proof of stake. There's different schools of thought. But I think proof of stake, if it works as Vitalik and the Ethereum people are hoping it will work, I think it'll probably be better.
Okay, so
but let me explain. So the challenge with proof of work is that, like I said, it takes a lot of energy, and then also it leaves Bitcoin susceptible to manipulation should someone get enough computing power. And this is kind of happening. Not the manipulation part, but I forget the exact estimates, but I think 20-something% of all Bitcoin transactions are running through Chinese companies that just have massive server warehouse, not server warehouses, mining warehouses. And at this point, I think around 20-25% is being run through these Chinese warehouses.
That was just to make a point. When you said that the average computer, before you may have, let's just do a number. Let's say you have 10,000 computers, 10,000 people running in their little desktops, whatever, mining Bitcoin. Now you need a special computer and that stuff, which is basically a money issue. Basically, the barrier of entry is based on how much computer power you can buy. So I'm thinking, okay, well, we know major, obviously Chinese companies can do that. I mean, Google has huge servers. Why isn't Google or Amazon Web Services or these companies that have a tremendous amount of web power or computer power and server power, because they're hosting all the major platforms in the US and major websites, banks, this and that? What prevents them from basically be mining Bitcoin? And
well, because they don't have ASICs. They can
get them. I mean,
sure, but they're gonna have to spend a lot of money. The servers Amazon has now wouldn't work.
Right.
It wouldn't be efficient, basically.
Right. There are different types of servers for different things, understood. But
so yeah, Amazon, could they in theory go and buy $10 billion worth of?
I mean, they already have the infrastructure. They
ASICs,
have the warehouses that are running up freaking freezing temperatures.
Yeah, so there are some companies that do this. I forget the name of one, but yeah, there are some companies that do this. That just, I mean, their whole company is literally
it's just basically a mining company.
Mine tons of Bitcoin or Ethereum or other things. Yeah.
Okay. All right. So okay, let's go back to the Chinese the issue that you were talking about.
So that's basically a vulnerability. Bitcoin has never been hacked in terms of no one has ever been able to reverse a transaction on Bitcoin's blockchain, and that's the whole thing. That there's a thing called a 51% attack, which is if you were to take over 51% of the computing power for Bitcoin, that you could manipulate
or basically take over.
Yeah. Now, that would be a massive amount of computing power. We're talking you would need billions and billions and billions of dollars worth of computing power, and a place to do it. And I mean, it's not a small feat, right? Basically, it's gotten to the point where the only people who could do it are governments. That's it. I mean, a government, but that's why the risk is, could the Chinese government do it?
Well, I mean, isn't the whole reason to decentralize currency to take it away from the government's power, and now the government is the only one who can basically ruin it or hack it?
It could. Now, if Bitcoin gets larger and larger, then it becomes more and more unfeasible to do it. So why is proof of stake better in theory? Well, because proof of stake works based on ownership. And so proof of stake verifies transactions. Why it's called stake is because let's say you have whatever $100,000 worth of Ethereum, and you, in the same way you have like a savings account, you're like, well, I'm not using this Ethereum, I'm just gonna I'm just gonna leave it there. Well, you can stake it basically, and this means that your Ethereum is locked for a certain amount of time, but then it's you get interest. Basically, you get rewarded in the same way you get rewarded for mining, you get rewarded for staking. So the best way I kind of compare it is like if you have a savings account, or if you have like a CD or something, or you lock your money up with a bank, but then they pay you interest. Very similar. So you lock your money with Ethereum, and then they use all of that as verification, basically. And so the benefit of that is the only way to do a 51% attack is you'd have to own 51% of all Ethereum in the world. And if Ethereum keeps getting larger, and let's say 20 years down the line, Ethereum is a thing that is well, we can get into what Ethereum can be used for, but if it does become what many think it will, which is like this underlying protocol for a lot of the world's functions, whether it be finance, smart contracts, whatever, it would be worth trillions of dollars, many trillions. And so the only way to get a 51% attack you would have to somehow own 51% of that trillions of dollars.
Right. So
it'd be very, very difficult.
You wanted to have a stakeholder with 51% of Ethereum,
right,
to be able to do that, which nobody is going to.
Right. It would be. There's no such thing as an unhackable system.
Right.
But it would be incredibly. Plus, just the fact of someone buying trillions worth of Ethereum trying to do this would cause it to go up even more.
Right.
The price, because they would be sucking all the supply out, and the demand would go up even further. So that's why proof of stake in theory is better. The challenge with proof of stake is that it does become more centralized, and it certainly helps the wealthier much more. And large institutions like a bank or a wealthy individual could have a ton of Ethereum staked. That's the argument against it. I think that's a shitty argument, because the truth is, no matter what monetary system you use,
that's always gonna be
the rich are always going to be more advantaged.
Yeah.
There's no way you can get around
people
that.
buy Ethereum just when they have some kind of disposable income or something. It's not going to be the person that is, you're living paycheck to paycheck. Obviously, I recommend that you don't even touch any crypto. That's just...
No, I'm talking like down the road. I'm talking, let's look at Ethereum 30 years from now.
Okay, yeah, either way, yeah.
But even then, there's no monetary system you're going to make where the rich aren't at an advantage. That's just how capitalism works.
Right. So my next logical question would be, why can Bitcoin use the proof of stake method?
Because they don't want to.
They don't want to, but they could, but they don't want to.
Could.
They're happy with their system.
Yeah.
Okay. All right. So let me back up a little bit. We said before that Bitcoin, the total number of Bitcoins to be issued, which is not there yet, is 21 million. And that started in 2009, like you said. Where are we now? Approximately.
I think around 18 million.
Okay, so basically we're at the last stretch. We're done basically.
Yeah, 2040.
Oh, there's a timeline for that?
Yeah.
Oh, okay. So that's the question. You said that they're being mined by all this network of people, but how do they control that? So how much do they mine each year?
Yeah, so it was set up from the beginning.
Okay, so that was
Satoshi
pre-planned.
set it up.
Okay.
So there's the block rewards. This is, if people have ever heard of the halving, Bitcoin halving, it's basically halving the block rewards. So back in the day, the block rewards were way, way more, and now they keep going in half and half. We just had a halving recently.
Right, I read. I'm not an expert, but I just read that it's down from 1,800 to 900.
Yeah,
which is half of the original. But it started like with.
Hundreds of thousands.
Oh, really? That much?
Yeah.
Okay.
Oh yeah. There's like famous, like Bitcoin used to be pennies and then a few dollars.
So now we're at 900 per year. Is that what it is? Or
no, it's per block.
Per block.
Yeah.
Okay. And then eventually it'll be 450, 225, and then half and half and half until basically in 2025, you said
2040.
2040 will be out. The 21 million Bitcoins will be done. And
Yeah.
then limited supply means the demand, when the demand increases, the price increases.
So it's the opposite of fiat currencies.
Right. That's
Fiat
that was my
currencies
point.
are inflationary. Bitcoin is deflationary.
All right, so let's elaborate a little more. Let's go a little more expansion into that. Fiat currencies, as we, and this is why I started the podcast with the Fed and all the printing money that we're doing now. And to make a little bit more of history, most of the countries' fiat currencies used to be somehow attached to gold, which is another thing that we may discuss. So in other words, the country's ownership or possession of gold, based on the value of gold, you cannot trade with gold. At least in modern times, back in the days, people used to trade with gold, but now you have the gold in a Federal Reserve safe or whatever, and then you will make dollars that are based on the gold. At some point, Nixon basically said we're not going to be attached to gold anymore, and then said dollar and gold are separate. And that I just opened a whole kind of worms for it. Once the U.S. did it, all the other countries did it as well. So now we're at the opposite extreme, where the government is just printing money when they need it, which basically is devaluing the dollar or any currency. European countries, euros, Chinese have been doing that forever, so it's nothing new to them. But basically, you start printing money just because you need it, which means the famous universal basic income and all that stuff that was, where are you going to get the money from to fund the universal basic income and all this Andrew Yang, the candidate, that was justifying where the money is coming out. Now it doesn't really matter. I mean, the government is just printing money out of there at the Fed. So that's basically what the dollar is doing. Now, the Bitcoin is the opposite. Bitcoin, you have 21 million Bitcoins, and that's it. There's no government that's going to say, oh, we need a stimulus package, let's print another 2 million Bitcoins. That's not going to happen. So that currency being limited, that means that the value of the Bitcoin may go up exponentially. And you say it's deflationary because as opposed to the dollar, which is inflationary, or any other fiat currency, basically, which right now we're seeing that. We haven't seen it yet, but it will be. The purchasing power of people with their dollars will decrease.
Not will. Is.
Huh?
Not will. Is. I mean,
What?
this year,
Yeah.
inflation estimates, real inflation,
Sure.
is like over 6%.
Right. Well, I mean, it's, it will decrease even more as a result of this pandemic effect that we have now, where we're just printing like, so far I think we've done like 6 trillion, I think, so far, and we're talking about 2 trillion package that I don't know when Congress or the House or whatever will pass it, but we're basically printing trillions of dollars that we don't have anything to back it up with. So that will create a huge deflation inflation for the dollar, and people don't realize that their buying power is going to be decreased. You're gonna get this $200 check, and you say, okay, it's great, but before with those $200, you were able to buy a certain amount of things. Now you're going to buy only half of the things. And a lot of people just say, oh, well, the cost of living. Yeah, that's inflation. That's basically what it means. It means that things that you were normally able to buy before, you will not be able to afford now. Even if you before with a certain salary were able to buy your house, if you were to buy your house today, it's not that the house has appreciated. The problem is that the house has inflated, and now with your salary you cannot afford your house anymore like you did 10 years ago, and that's actually a result of inflation. It's like a hidden tax, basically. So based on that, Bitcoin on what is the limit for Ethereum then? Is there also
There's a limit. I don't remember.
Okay, but it's the same system, right? I
Yeah.
mean, there's a limited number. Is that the same for all cryptocurrencies? Pretty much. Approximately, I mean, is that
For a lot of them, yeah. I mean, I don't really pay attention to a lot of them. I mean, I think ultimately you'll probably have at most maybe 4 or 5 major ones left. Like if we're talking like, let's fast forward 30 years, you'll probably have like
It's
4
gonna
or 5
consolidate.
maybe.
Right.
I think again, I'm just saying what is the most likely outcome. I'm not saying this will 100% happen. If I had to guess, I think Bitcoin and Ethereum will be the main ones. I think Bitcoin will be the primary store of value, and that Ethereum will be used for all of the decentralized applications. And then the other ones, I think you'll probably have like maybe Monero or Zcash for privacy, because those are the ones that they operate differently and how they execute their transactions, in that you can do things anonymously, which Bitcoin and Ethereum are not anonymous. You can see what wallets are doing what, basically, and you can figure out who owns a wallet.
Right.
So I think if I had to guess, there will probably be at least 3: Bitcoin, Ethereum, and a privacy coin, and then maybe 1 or 2 other big ones. I don't know, but that would be my guess. We won't have 3,000 cryptocurrencies. Most of them, 99% or more, will fail. Yeah.
Okay, so with that said, and I look at Bitcoin and Ethereum, and like those two specifically, and gold, and obviously a bunch of stocks on a daily basis. And what makes, like traditionally you say, okay, when like stocks and bonds are in different directions, and gold is like the safe investment against inflation, all that. So where do you position cryptocurrencies, or Bitcoin specifically, or Bitcoin Ethereum, in the spectrum of what possibilities so people can put their money? Like we said, I mean, right now there's little places. So if people
I think
decide to buy Bitcoin, why would you do it? Is it for safety? Is it as an investment? Is
well,
it
if you're buying Bitcoin now, you have to buy it looking at it as a risk asset. Because that's what it is, right? If you're buying Bitcoin, you are basically betting that, if you're buying for the long term, if you're trading it different, but if you're like, I'm going to buy Bitcoin and hold it for at least 10 years or longer, your bet is that fiat currencies will go down in value tremendously and will continue to go down, and that Bitcoin will be adopted as a hedge against that in the short term, and then maybe potentially be actually used as a primary currency in many places around the world in the future. That's what you're betting if you're buying Bitcoin. Now, the odds of that happening are not that high. I mean, if I were to put a percentage, there's different things. Will Bitcoin stick around as a hedge? I think the most likely outcome is Bitcoin will become digital gold, meaning that it will exist in tangent to fiat currencies, at least for a long time.
Right.
The odds of Bitcoin actually becoming like the global currency, I don't know. I mean, that's very complicated, because that gets political, because you have to have governments willing to give up their own currencies in favor of Bitcoin.
Exactly.
So that's a different question. I think the most likely, and we're looking at timelines too. Could that happen on a 100+ year timeline? Yeah, I think at some point it probably will happen. And maybe it won't be Bitcoin, maybe it'll be a different coin, but I think at some point in the next 100+ years, cryptocurrency will become the global primary currency, and that will happen just because fiat currencies don't last forever, and they'll probably collapse, and then people will turn to Bitcoin or some other cryptocurrency.
All right.
What I think the more likely outcome in the next, like, say 10, 20 years is that Bitcoin will be digital gold, and that you could see Bitcoin achieve a market cap similar to gold in the trillions of dollars, which would mean that it goes up at least another 10x from here.
So that's good, because I was going to segue into this question. Traditionally, people that want to fight inflation and the devaluation of their local currency, whichever country they live in, they try to invest in commodities and some precious metals like gold, silver, maybe others. What is your conversation or your thinking for the person that says, okay, I want to protect myself? And again, we live in the U.S., which is, I mean, the dollar is going to be always the default, I mean, the de facto currency for all transactions for a long time. But let's say you live in a country that is not like Argentina, Venezuela, or even some European countries.
Yeah, but even if you live in the U.S., I mean,
Yeah, okay, yeah, in the US, but I'm just giving you more extreme cases of today versus the US maybe in the future. But so if you have the option to say, I want to protect myself, what do I do? Do I go into Bitcoin or gold or both, or why one versus the other? Like, there's a lot of people that we know that are hardcore defenders of gold investments, and they don't like cryptocurrencies at all. And there's people that swear by crypto, but they say gold is not an option. So
there's two answers. If you live in like Venezuela, for example, where we can see exactly what the people of Venezuela are doing, they are using US dollars and they're using Bitcoin. So if you live in a country where your currency isn't worth anything, the US dollar is still very valuable, right? The US dollar is still the world's reserve currency. So even if it might be inflationary and maybe over the next coming decades, it's going to have some turbulence, as of right now, it's still a very good option if you don't have a good currency in your country. And so that's why you see in a lot of these countries, people want US dollars, but now they also want Bitcoin. In Venezuela, there is quite a bit of Bitcoin. Argentina, there's Bitcoin. Nigeria, people use Bitcoin for actual transactions. Now, in the U.S., if you're looking... So first of all, I own gold and Bitcoin. So I own both. I think this idea that you only have one or the other. Gold is good, right? Here's the primary argument between Bitcoin and gold. What's the pro-Bitcoin versus gold argument? Well... what does gold do, and why do people buy gold? Well, gold is not a fixed supply, but it's pretty fixed, right? The only way to get more gold is to mine it, and to mine gold is very expensive and takes a lot. So you're not all of a sudden going to see the supply of gold go up by 10% in 1 year, like you might have a fiat go up, right? I mean, when people dig gold, we're talking... Annually, they might add like 0.5% to the supply.
That's the explanation. Just to make a little point, that's the explanation that we just said about the government printing money. Back in the days, if there was a crisis like this one or the one that we had in 2008-9, the government could not just say, hey, we're going to mine more gold and send it to everybody, right? Because it was just not possible. So right. Therefore, they could not send money because money and gold were together. Money was just a representation, it's a note that's attached to the gold. Once you separate that basically collateral that valuates your dollar, then now we're just printing money that is not related to anything and just printing money just for the heck of it. So right. That's exactly the point that you're making.
Right. And so the benefit of gold is that it has a nearly fixed supply, and even when it goes up, it's not like the supply is going up that much, and it's just been used forever. I mean, it's been used for thousands of years. It's what you might call Lindy in those circles, right? So gold's value isn't going anywhere. I own gold too. You can look at the price of gold. It's been a phenomenal hedge against inflation. You can look at the price of gold in the early 1900s versus the dollar and look at it today, and it's pretty much matched inflation. So as inflation goes up, your gold value goes up too. In fact, one of the things, Nick Szabo has a blog that is really good, and one of the things that he wrote when he was researching that was fascinating is that he said if you adjusted for inflation, the pay that the Roman soldiers were getting back in Rome, in the Roman Empire 2,000 years ago, that he was able to kind of calculate how much gold they were getting paid. When you adjusted it out, it was the exact, almost to the thousand, like dollars that soldiers get paid today. We're talking like normal soldiers in America today. Like, that is how good gold is as a hedge against inflation.
They don't get paid much, I'll tell you that.
No, they don't get paid a lot, but it was basically the same amount.
Yeah.
And so that was pretty fascinating. So gold works great. Where does gold fall short? Well, you have to store it, and storing it costs money. You have to have it in big bank vaults, bank vaults with men with guns guarding it, or else people are going to come and try to steal it. If you want to transport it, you need to guard a truck or something. It's not that cheap to transport. You're a high value target.
It's a physical asset, so it comes with all the risks of
it's
any
not
other physical asset.
easily divisible. So if you want to pay somebody in gold, especially for smaller day-to-day transactions, it's not really practical. So those are the problems with gold. The thing that Bitcoin solves in that is that Bitcoin is digital, so you don't need physical storage, you don't need physical transportation. It's infinitely divisible. It's just numbers on a computer. You don't need to cut little pieces of gold off, right, to pay for your coffee. It's infinitely divisible. So it solves a lot of those problems. The other problem with gold is that it ends up becoming centralized itself, because most people don't want to own physical gold because it's a pain in the ass. So they end up buying into gold trusts. But then ultimately a trust is what? You're trusting that organization, that company, that they actually do have the gold you say. So that's
they also have fees because of the research you said. They have to store it, they have to do this, all that stuff.
So those are the problems with gold.
Right.
Bitcoin basically solves all those problems. That's why I refer to it as digital gold. The biggest argument against Bitcoin is just that it's new. Bitcoin is 11 years old. Gold is thousands of years old. So gold has stood the test of time. Bitcoin has not yet. It hasn't had the chance yet. So that's the biggest argument against Bitcoin. It just hasn't been around that long, and we don't know. The other argument against Bitcoin is that it could be replaced by another cryptocurrency. That you could, in theory, anybody can go and just fork Bitcoin, make their own Bitcoin, and if they do it better, then you have your own.
All right, so
those are the two arguments.
those are good.
Like I said, I own both.
Right.
I think gold is good.
I think diversification is always
Bitcoin is good. As of right now, Bitcoin is more of a risk asset because it's newer and just pure market cap. The global market cap of gold is 7-8 trillion, I think. The market cap of Bitcoin, I think, is like 400 billion right now. So just in terms of that, Bitcoin's much more volatile, it's a risk asset. But in theory, I think Bitcoin could replace gold, or at least be another option next to gold.
So one final question from me regarding the crypto. I think we have a couple more topics I wanted to get to quickly. What prevents governments from creating crypto dollars?
Nothing. They probably will.
Basically, as a kind of digital currency that
I mean, the Fed has already talked about digital dollars. I think in Europe, they're going to do the same thing with the euro.
But is it going to be attached or subject to the same principles of cryptocurrency, saying we're going to have this limit?
Probably not.
Right. I mean,
No,
digital dollars. I mean, what does that mean compared to the current dollar? If basically it's just, I mean, right now, I mean, most of the transactions are digital. I mean, you make transactions without actually physical money in your hands. You can transfer money, you can receive money, you can do everything. You never see the money. You basically it's all digital, so to speak. So to me, is the conversion to digital dollars. I don't understand it versus what we're doing now. I mean, if they were doing crypto dollars, that the government says, okay, we're going to print X amount, like Bitcoin, say we're going to print $20 trillion, which is that's what we have, and then we're just going to let the money appreciates, but it's limited to basically the amount that we have.
Yeah, they're not going to do that. No, they're not doing that.
Obviously, because it's not convenient. Then they trap themselves into a situation where they cannot.
I mean, they might. I don't know. I can't speculate what's going to happen because a lot of this gets into your beliefs around money. I mean, some people subscribe to the modern monetary theory, right? MMT, and that is the idea that we can just print money, and that will solve a lot of the problems. And there are economists and very famous people who believe in this stuff, right? Paul Kruger, I forget, there's a woman at, what university is she at? I forget that she's a big vocal. I mean, there are economists who are big believers in modern monetary theory, which says that if you're the United States and you're the global superpower, that you can just print money forever and you're not really going to have consequences, and that, in fact, printing money is an excellent solution. I don't believe in that. A lot of people don't believe in that, but there are people who do. And the current Fed policy believes in that right now. Will the Fed change at some
Well, they
point?
did it before. They just do it now because it's more convenient.
Right. Will they change at some point? Maybe. I can't predict what politicians are going to do. But at least in the near future, they're definitely not going to change their ways. They're going to just keep doing modern monetary theory. Yeah, they're going to make digital dollars probably, but it's going to be no different than fiat. It's going to be digital fiat.
Right. All right. So the bottom line is that cryptocurrencies and Bitcoin, Ethereum, as we kind of
No,
said,
I didn't get into Ethereum. I think Ethereum. So Bitcoin is only going to be like a currency. Basically, Ethereum is not necessarily a currency. I mean, it is, but
the currency is Ether, right?
right, it's Ether. But the goal of Ethereum is not necessarily. I mean, it is and it isn't. It will become valuable because the idea of Ethereum is that it will be this base protocol layer for what we call decentralized apps, decentralized applications, DApps. And that in the same way that when the iPhone came out and there's like the App Store, that all of a sudden there were a ton of apps that could be made and things that could be done that previously were impossible because now we had a computer in our pocket, whereas before when you wanted a computer, you needed like a desktop. I think in its own different, but in its own way, these decentralized applications there are a lot of things that will be able to be done on Ethereum that were not possible before.
Right.
And that Ethereum will be the basically layer for all that. They call it L1 is layer 1. And now there's going to be, the goal is that there will be lots of L2 and L3 applications that are built on top of this. And so Bitcoin, that's not necessarily the goal.
That's one of the reasons why in the beginning I liked Ethereum more than Bitcoin. I think Ethereum was like cryptocurrency 2.0, if you will. You know, when it came out, like it was a little safer than Bitcoin, and also it had more potential than Bitcoin down the road as far as different applications.
They just have different goals.
Right.
I mean, you know, Ethereum is really interesting because you can get into all types of, I mean, there's lots of theories of where things could go with Ethereum. Some people think you could take Ethereum to like one idea is that every company in the future is not going to issue shares anymore. They're going to issue tokens.
Right.
And the reason that changes things is because now you have token holders, but those token holders can, for example, like say Ford issues a token instead of a share. And instead of buying shares in Ford, you buy tokens in Ford. Well, if you don't like what Ford is doing, what Ford management is doing, you could fork Ford and you could make your own Ford. And you can make a tangential Ford and then run it how you see fit. Right, like that's kind of the idea, and then the ultimate idea is they have what's called these DAOs, DAO, decentralized autonomous organizations, which are organizations that run based on a set of protocols and rules that are voted on by the token holders, and so each person who owns a token, right, like say there's 100 tokens for a company. And the more tokens you own, the more votes you have, basically. And so whatever the consensus is on that company, the token holders, then this autonomous organization will then execute. And it's almost like, now again, this is all in theory, right? These are things that I think are very far away, and there's a big problem of legislation that comes into this and regulation. But they have this idea of decentralized autonomous organizations where people aren't even running it. It's all protocols that are running the organization. And then in theory, you could get rid of, you don't even need like public markets anymore. You don't need the SEC. You don't need the New York Stock Exchange. You don't need these things. If every private company just started issuing tokens, why do companies go public? Well, one is to exit because they want to exit. They want liquidity for the founders, for the early investors, early employees.
Raise money. to raise money too.
But the bigger reason is because when you go public, you have access to capital markets and financial tools and debt tools that you don't have as a private company. But if every company just starts issuing tokens, then you can have markets on Ethereum that provide all the same liquidity, all the same debt, all the same tools that you could get going a public company, but you don't have to go through all the regulations and go through the SEC. Right. So these are all things that in theory could be done. Now, will governments let them be done is a different question. But these are all things like if you're talking to the what they call like the cypherpunks, I mean, they think that really in the future you don't need governments. That really entire governments could be replaced by protocols. Basically, because what is a government? I mean, a government is a set of laws, a set of rules.
Well, we're getting too far.
And you could just replace those all with protocols in code. And so that's, again, I think that's idealistic. I think they're taking out the human factor of humans like power, and governments don't like to give up their power. So I think that's very far-fetched. Maybe 100 years from now, I don't know, but in the near future, I don't think any of that's happening. But these are all things that are possible, and that's why the world is so exciting, and we're still in very early days.
All right, so one final question now, and I think, okay, so obviously we're an hour and 20 minutes or so, but this is the real final question for the entire podcast, by the way, because we're not going to get into any other topics. But let's come down to the practicality of, like, let's say I own Bitcoin, and I want to leave the US, go to Spain, and have my Bitcoin there and use it there. Mm-hmm. You hear obviously the Bitcoin wallets and the exchanges and all that. So how do I move my Bitcoin? How can I be able to use my Bitcoin in another country? Let's say that a person in Venezuela has these savings and is fed up with their country. They say, you know what, I'm just going to move somewhere else. My Venezuelan pesos or whatever they use there are worthless, but I have this Bitcoin and I want to use it in a different country. How do you move it?
You don't need to move it. As long as you have access to your wallet, you don't need to move it.
Okay, so let's describe briefly, without too much detail, what the wallet means, which we all know what a physical wallet means, but a crypto wallet basically, because you need to have somebody in another country that accepts your currency, your Bitcoin in this case. So how does that happen?
A wallet is just does
the wallet
a method of, how do I describe it simply? It's not a physical wallet, right? It's basically a thing that that has an address, right? And that you send things into, but the only way to take out of it is if you have a key. And when you generate a wallet, you get a key, and you're the only person who has that key, unless you give it to other people or whatever. But it's basically a code. It's like a password.
So wallets are international, or you need to get a wallet? Like my wallet in the US will be also usable.
Yeah, Bitcoin doesn't have borders. Bitcoin is not affiliated with any government or Ethereum or any of these. I mean, it's decentralized. That's the point.
What if I want to transfer, let's say that you have Coinbase, for example, as your exchange?
Yeah, so if you use a centralized exchange and you keep your Bitcoin in there, that's different.
Right.
But that's not a wallet.
So the wallet is when you take it down from the exchange, which is the server.
Yeah, I don't recommend you keep your money in an exchange. I think that would be very stupid. You should keep your money in a wallet.
But don't majority of people have the money in some kind of exchange?
No, I think majority of people have it in a wallet. Because an exchange is it's an exchange. But once you're like, I use an exchange to exchange dollars for Bitcoin. But once I have my Bitcoin, I send it to my wallet. I don't keep it in an exchange. Because this exchange is centralized. You're losing the whole point of Bitcoin. If that exchange gets hacked, then you're screwed.
Happened.
Right, it's happened.
So, but back in the days, then people used to leave the money on the exchanges. They didn't have wallets.
Sure,
the wallets came later.
No, wallets have always existed. But
are wallets not hackable?
No, they're not hackable. Unless you lose your keys, right? If you give up your key to somebody, it's no different than if somebody gets the key to your house.
But can the key be hacked? I mean, it's just an alphanumeric code.
Yeah, but it's like, can they guess it? I mean,
No, I mean, not guess it, but I mean, talking computerized.
no. I mean, in theory, yes. In reality, no.
Okay.
You would need. No, it's not hackable.
So you use the exchange to like as people use to convert their dollars or like whatever money they have into crypto, let's say Bitcoin, and then you download it to your wallet. So you have a digital wallet, which is basically not physical. It's a digital wallet that you can only access on. There's apps that you can use on your phone, and then you have a key, and then with that you can travel anywhere in the world. And then with that wallet, you can in theory pay with Bitcoin to any transaction that accepts Bitcoin.
Mm-hmm.
What if you want to convert that Bitcoin into a local currency?
Use an exchange.
You go to a local exchange.
Mm-hmm. Or not a local, just any exchange. I mean,
Well, I mean, are the exchange like is Coinbase international? I mean, you go to Europe and use it.
I think Coinbase is mainly U.S. I don't know what they
Right.
do.
So you need to
international.
find a local exchange to.
Yeah, there's other exchanges though. So there's a thing called KYC, know your customer, that like in the US, Coinbase uses, where you have to verify your identity before, in the same way with a bank account. There are exchanges that don't do that. They don't require that. That they'll just take your money. They don't do identity verification or anything
Right.
like that. So you could use one of those. It depends. Are you like running away from the government?
No. I'm just basically thinking.
First
okay,
of all,
so-
wouldn't you? If your worry is hiding from the government, don't use Bitcoin.
No, it's not a hiding thing. It's just, I mean, if I go to another country and I want to use euros, I have two options. Either I exchange some euros here before I leave, so I have something when I arrive, or I wait until I arrive and I go to an exchange bank, whatever, and I exchange some of the dollars I take with me with euros. Obviously, I can use a credit card, whatever, and all that stuff. But those are the options that I have, because crypto is crypto and it's encrypted. I don't know how would that work. You know, if a person has only crypto and wants to go to another country, I cannot go to Chase and say, I have this, can you give me?
No, but you can go to a crypto exchange.
Right. That was my question. You go
You
basically
can go to
an exchange.
Binance and exchange it.
Right.
You
So
know?
you need to go to a crypto exchange and then with your digital wallet transfer and other stuff and make that transaction. And then the same thing when you go to another country. I was just trying to clarify how that practicality of physical transactions
no
work.
borders with cryptocurrency.
No, I understood. I mean, there's really no borders with any currency, but the border or the barrier of a transaction is that one is very physical and we're used to it. The other one is not really there yet. So I don't know if there's a credit card. I can go with any credit card that is Visa, MasterCard, internationally accepted, and then I can buy things in any country. And they will charge me a fee for the exchange rate and all that stuff. And that's just the price you pay, but you can use them. I don't know if there's any credit card or debit card that you can use with crypto that says, okay, well, I have, 10 Bitcoins, which is worth about $60,000, $65,000 or whatever, or no more, 100,000 something. And I then go to a country and use that credit card based on the value that I have for crypto to make transactions. How easy is to do something like that? Is that even feasible?
If you want to spend your Bitcoin,
Yeah.
like directly,
Like use it, yeah.
I mean, it depends if they take it. Or
I know we said last week that PayPal already takes both Bitcoin and Ethereum, and you can basically they actually act as an exchange themselves. They exchange.
Yeah, I mean, if you want to not have middlemen and just do Bitcoin transactions, yeah, I mean, obviously that's like where Bitcoin needs more adoption is people need to transact in it. One of the biggest problem Bitcoin faces is nobody wants to spend it.
Right.
Like I have a bunch of Bitcoin, I could spend it, but I want to keep it.
No, obviously. I'm
it's
just
going
talking
up in
about people
value.
that don't have a choice because all they have is Bitcoin and now they need to start using it for the daily
Sure.
expenses.
Nope. Yeah, I mean, the easiest way right now is just go to an exchange and get your euros or dollars, whatever you need.
Right.
But yeah, obviously the ideal in the future is that you can spend it directly. That's why we didn't get into the Lightning Network with Bitcoin and all that.
Right.
But that's the idea, that you could buy anything with Bitcoin. But yeah, that's where the adoption comes in.
Wow, very intense. An hour and a half almost of crypto. Anything else?
Grilling me. I had to reach deep
Well,
into my memory bank.
You are. I mean, I know the basis of the technology, blockchain and crypto and all that stuff, but I'm more on the surface, and you definitely are much deeper into knowledge. That's why I wanted to ask you this, because I do have a lot of friends, investors that are amazingly not very aware of how crypto works, or blockchain, and maybe they are all more old-fashioned traditional investors.
What I'll say, I think how it works when we're talking about if it's going to be used by the masses, I don't think. I think people in the crypto community are way too concerned with trying to explain the mechanisms and the technical side of how it works to people. I don't think people care.
No, but I think
I don't think most people even, if you ask anybody on the street, can you explain to me fractional reserve banking, which is what every single bank in America operates on?
Yeah,
they have no idea.
It
doesn't really matter. You just need to make it work and be convenient. And that's why Lightning Network, if it works, is going to be a big difference maker.
But even as a company goes public and they say, okay, X company is going public, they're issuing like 100 million shares or whatever, and then they give it a value, which is the IPO, initial public offering. And that value basically starts trading, and if investors think that it's a good investment, then obviously it goes way up, and then the initial investors get their money back, like you said, and then new investors start. But it's based on a limited number of shares that are issued by the company. So some people obviously understand that. Some people they think that there's, for every time you make a transaction in the stock market, when you buy some shares, means that somebody else is selling them. It's not that you buy something from the shelf. There's people that are buyers and sellers, and that's where the exchange is. Whereas New York Stock Exchange or whatever. So somebody's selling and you are buying, and somebody else agrees to sell at a price, and then you buy at that price. That's understood. In the crypto, it's very new, and that's why it's so volatile, because there's a limited number of shares in this case, which is coins. So every transaction, when people have liquidity issues, like you mentioned to me the other day, and they say, okay, well, I was investing in Bitcoin, but now for whatever situation, I actually need the money, so I need to sell my Bitcoin by necessity, not because I want to, and multiply that times thousands of people, then all of a sudden there's a big supply of Bitcoin that is out there in the market, and then the value depreciates. And that's why you see these big fluctuations. Like just in the last few days, Bitcoin went from, like I said, 11,500 to 13,700. And then just between yesterday and today, it went down from 13,700 to 13 flat. And now it's back up to 13,500, 13,600. So that's because people are basically trying to figure out what to do, and some people don't have a choice but to sell it. But because there's a limited supply so far, and it's very new, there's a lot of fluctuations. If I sell 1,000 shares of Caterpillar, it's like a fucking nothing. It's not even if Caterpillar doesn't care. If a mutual fund or something sells millions of shares, then yes, you see some fluctuation on the stock price, obviously. So that's the situation that is happening with Bitcoin. That is a little more of
so, okay, we had this discussion. I think a lot of people don't understand what Bitcoin as an asset, like basically back in March when everything was dropping because of COVID, the markets dropped, bonds went down, gold went down, and Bitcoin went down.
Right.
Everything was down.
Right.
And what I was saying to you was that it was because there was a liquidity crunch. It's not because that basically the reason why even gold went down, which gold is the hedge in a lot of these situations, or bonds versus stocks, right? A lot of people buy bonds as a hedge for stock. Everything was down because when you have a liquidity crunch, everything goes down because you're always exchanging something for something.
Right.
And so when you have a liquidity crunch, meaning people need dollars because right now we transact everything in dollars, and you have a margin call here or you need to cover a loss here, you need dollars to do that. And so you're going to sell anything, whether it's gold, whether it's bonds, whether it's stocks, whatever, or Bitcoin. And that's what happened. Because really when all those things go down, you know what that means? That means the dollar is going up. Right? Because you are exchanging something. We don't think about it that way, right? When you sell a stock, you're saying, I want to exchange my shares in this company for dollars, right? Or vice versa. You're saying, I don't want to own dollars. I want to own shares in this company, right? People don't necessarily always think about it like that, but that's what you're doing. And so Bitcoin went down. Now, over this year, Bitcoin is up. And my thing is, Bitcoin is not a hedge for volatility. And what we had earlier this year was massive volatility. I mean, look at what happened with the VIX. Bitcoin is not a hedge for volatility, and Bitcoin is not a hedge when you're investing. I mean, this gets into like risk theory, but there's different types of risk. And what the biggest risk that was happening in March was actually uncertainty of what the pandemic was going to be, because we had no idea. And so because of that, everybody was selling everything because they said, I don't want to own any shares in these companies because I don't know what their earnings are going to be. I don't want to own these bonds because I don't know if they're going to be able to pay back their bonds.
The market sell-off. I mean, in March, market dipped.
And so because all of a sudden you had this spike in volatility, Bitcoin is not a hedge for volatility. What Bitcoin is a hedge for, if you're looking at portfolio risk allocation, Bitcoin is a hedge for sovereign debt and a hedge for inflation and currency manipulation. That's what Bitcoin is a hedge for. Bitcoin is a hedge for a sovereign debt crisis and currency crisis. And so when the US dollar starts, or when the US government starts printing a ton of dollars, that's when Bitcoin goes up because it's a hedge for that. And gold is very similar. So that's what Bitcoin's a hedge for.
Right.
But it's not a hedge for volatility. And when you have volatile times, Bitcoin's going to be just as volatile as everything else.
Yeah, the amazing thing is that Bitcoin has great advocates and great detractors. I mean, people love it or hate it, and they don't. You tell some people anything about Bitcoin, it's like they don't want to listen to you. And some other guys are like they right by Bitcoin and any crypto. I mean, they think that is the future. So I think there's always somewhere in the middle. But again, the same thing happens with gold. You know, you have people that think gold is the safe haven for everything, and some other people say, no, why own gold? I mean, it's like, I'm never going to use gold anyway, so might as well just save money or whatever, you know. So, all right, I think we'll wrap it up here. Thanks, David, for this amazing, I mean, it's amazing, really, all the knowledge you have about all these topics. It's not easy to understand, and hopefully everybody's a little more clear now on how crypto works, blockchain and everything is. I'm more confident, especially as far as making, being able to make educated decisions where you decide to buy or not. And we're not advocating where you buy or not. We're definitely not financial advice, but because of the time that we live now, with the pandemic and global situation with governments and printing money, and we're already knowing that the economies around the world are going to take a hit at some point. Once the governments realize that they cannot print any more money and everything is going to be a little bit more chaotic. It's good to know the options that are out there, including, from fiat currencies to Bitcoins to gold to normal investments or just basically saving money. So any other final points, David?
No, I think we covered a lot.
Okay, well, that's it for now. Good luck with the elections for everybody, whoever you vote for. Hopefully you're happy after the elections, and we'll see. Hopefully it'll be peaceful, and we'll find out who the next president of the United States is soon.
Kanye 2020.
Yeah. We'll see. We'll see you hopefully maybe by next Thursday, which is 2 days after the elections. We may even know who it is, or maybe we're still counting the ballots in the mail and all that stuff. So it's exciting. We'll be looking forward to that.
Is it exciting? It's not exciting.
I'm actually excited. I'm looking forward to it. I'm looking forward to it mostly because I want to get it over with and then just focus on something else.
I can't wait.
It's being, I think, is the most interesting election that I've lived in my life, as far as at least in the U.S. for sure. And that's what I said last night too. So we'll see what happens with this one. So anyways, until next time, have a great weekend, and we'll talk soon. Bye.